Good evening all, hope you're doing well. We're in a fear phase. We're not extreme fear because we have got a little bit of green on our dashboard here. So what we go from extreme fear, then caution, then we'll go to a complacency, and then we'll go to greed, and then we'll go to a thing called dominance. But obviously we're at the sort of negative side of the market sentiment because we're not quite to complacency yet, and we're in a fear phase. So we'll go fear, caution, complacency, and potentially we're going to go to caution. I think perhaps even before the end of the close. The way things are going, the VIX is getting pretty crushed, and because of that, I think we're probably going to have a bit of a risk-on rush towards the close potentially. But we'll go green on this technical if we go above 50%, and so I think it's going to be an idea to look at some technicals, and just so we can get an idea about where things are probably going to be headed. So it's worth noting the yields, they all pumped high apart from the 3-month, and that which is now inverting from the 6-month. All right, so that's coming down. So in a sort of traditional sense, if the 3 and the 6-month comes down, it can lend to some dollar weakness. Okay, so we'll see like cross dollar is coming down. It might be coming down to take stops. Okay, so we'll have to keep an eye on that. Like I say, the VIX is getting crushed. The 10-year Treasury yield is pumping. You know, we can see on here, and the dollar's been basically sedated. So we had a good day on a robot, which is cool, which I'll talk about at the end of this video. And I'm doing some testing side by side, and my other testing, which is technical only, has done really well. So I'll show you that later at the end of this video. I'll try not to make it a massively long video today. So where are we? Tuesday, aren't we? So there's the EU, right? So we know we should expect to see that decline because they're net long, and they're probably going to add long. You know, it's possible. Also AU as well, and NU. Then there's S&P. Now with S&P, the way that we've moved from a week ago, this time next week, it will be a sell, okay? Because the herd will be net long, and that's going to be massive when that happens. So this time next week, okay? So hold on to your seatbelts, basically. So remember on the QDB scores, you know, the dollar's got good scores. Look at dollar CAD, dollar Swiss, you know, we're green, and we've got a buy bias. And AU, we've got a sell bias, and EU, sell. However, what's happened today on EU, we've had a slight improvement on our technical and sentimental scores. So we've got a mismatch there. So it depends on how you want to approach it. Fundamentally, it's quite weak. We had a little reversal today in the scores, but we see that price is dropping a little bit. So it was a bit of a tricky day. We can also see we've got a bit of red on Aussie, and we've got some red on the New Zealand dollar as well. And if we come to the bubbles, there's a Aussie and Kiwi here in the strong sell section. So that matches the sell bias that we have here. And remember to avoid range as well. Just keep an eye on sell setups for AU, EU, GU. Although, yeah, that's okay. It's -4s, okay, and NU. So if price does pump on any of those, then you're looking for retracements, okay. So what's happened the last couple of days is that we've seen cross dollar, and what's happened is that it's retraced before New York, and then when it comes to New York, then we see like the leg down, which I can show you. Yeah, let's just show you this. So basically, oh, come on. So you know, the retracement aspect here, right? So the thing is, you know, we're obviously, well, it looks like we're trending lower, and what happens is that it does this retracement thing, right? And it's quite frustrating to trade, but we have to remember we can't go in a straight line. We can't do it. It's just impossible, because there has to be ebb and flow, and there needs to be give and take, and there needs to be buyers and sellers, and all those opposites. They're constantly working against each other. And so what I've realized over this many years trading is that it would be highly unusual if it didn't retrace, right? So while you think, oh, this is really annoying, why is it doing that? It has to, okay? So once you understood that, this part, then it's like, oh, okay, so it's a matter of fact, it just has to do it. That's fine. And then you're simply looking for the retracement, and then you're looking to shorts, all right? And it's a decent pips, decent profit there if you're patient. So what could happen is that you're looking to sell, and you might have shorted there. And you think, why is it going up? And you're getting really frustrated and really annoyed, perhaps even angry. And what's happened is that you had a poor entry, and you've got to wait for the retracement, okay? And that's like a punishment, and it's quite frustrating to trade. And but it is what it is. It has to retrace. A lot of people would have entered there, and they just didn't have the patience to wait. And which brings me into the logic of the robot. We had a good day today with a 1.R, and the thing is, we could have entered willy-nilly, and we could have entered here, or we could have entered here, we could have entered there. What's happening now is that we're using the Twitter sentiment to trigger the trade only if we have the switch from buy to strong buy or sell to strong sell. So we need a quick change on the technical. At the same time, we have the the Twitter sentiment give us the trigger. Okay, so what that means is that we won't have many trades because it needs to be a very narrow window of opportunity. Once it seizes that, then it will enter. So it looks like we may get a couple of trades a day, which is fine, but we'll probably have to looking at increasing the sizing because we're using the 0.04. If we're getting a couple of trades a day, we don't have to worry about our margin. We can certainly look to increase those sizes. And like I said, we've got a 1.8R today. So we risked 10 pips and we got 18 pips as a reward. So it's not as good as yesterday, but it's still profit. And this new approach is going to require quite a bit of patience, but it will get us out of a lot of trouble where the technicals would have triggered because it would have been it looked quite heavy, and the technicals don't understand the retracement aspect, and we would have probably encountered a loss. So I'm doing testing side by side, and I'll report back over the course of the week and see which one's more profitable. The danger is with the technical only, it does enter and it doesn't understand the retracement bit, right? And that's the trick with manually trading. You have to understand there's that part of trading that has to happen, and we have to almost resume back to the mean. If we've really fallen like 2 or 3 standard deviations from the median, then we have to retrace back to the median because we've oversold or overbought. Okay, so that's just a quick one there. So that's fine. Work in progress. It's going really well. I'm very happy, and we can certainly look at increasing the sizes tomorrow, really, because we're not going to have that many trades using this new window of opportunity method. Okay, if you need me to explain that, let me know. I won't mind at all. So let's look at the technicals quick. And with ES, which is S&P, the E-mini futures, I thought we may have had a retracement to the lower for a bounce. And then what I could imagine, what I thought was going to happen was that we're going to have a bounce of the lower to the median and then sell off, right? So we're going to have this kind of zigzag. But currently what's happening, we're just sort of floating a little bit. This is an okay pitchfork. It does make sense because that's the swing high. Perhaps that could be mapped a little bit better, but that's okay. And then that's pretty much spot on. So we probably should have come down to the lower for a bounce. But it looks at the moment it's just sort of hanging in midair. So I can still see this happen where we're going to have a bounce off the lower, which would be 5065. And let's look at the YM, which is your Dow Jones. Okay, and we're still in this strong down channel as well, and we've created a supply which we probed quite strongly. Yeah, so we created this price action here. It's going to act as resistance, come up. So these are really good, these indicators, this supply and demand. This one here, the RSI based automatic supply and demand, that's the one that I use, and you can use it for a really good profit. So what you can do is place orders, and then your stop is going to be just above there. But you need to make sure you're going to get a good risk to reward. Okay, so if you're going to risk that amount, then you need to at least get at least equal, because if you get equal, you're going to be breaking even long term, and you don't really want to be breaking even. You want to be making money. So that's how you can use the setup, because we know we are looking for a sell because of the trend, and then if we get a big retracement, then it's not a bad entry. And you could also put a trading stop in as well, which is something that the robot's been doing, and that's how we're getting a good reward for what we're prepared to risk. So that's an option. So a little technical view there. So I think S&P probably down to the lower pitchfork, and also the YM, the Dow Jones, has hit some resistance there. So that's that. Know that we've got a stronger USD, so that's kind of given us a risk-off vibe, and we are in a state of fear on the sheet, but I think we'll probably go to caution, I think. But it will depend on that. That needs to go above 50%. So remember, we are probably technically a little bit bearish on US indices. So then we'll come to the sentiment and bring that across. S&P. So now the thing is, sentimentally, it's actually, they've sold it, so we can actually make a support box. So we have a little bit of discrepancy here, where we might not have to come down to the lower pitchfork support, because basically we've made a buy. They've inadvertently made a buy because they've sold it. But you can't blame them for doing it, because it does look quite bearish. So we should be above this box, and we are. So that kind of proves that sentiment is probably going to work out on that, okay? And also you know where your stop's going to be as well. So you're looking to get a good risk to reward, right? That's the key. You don't just like, oh, I'm going to get out now, I made 10 pips, but you were prepared to risk 50 pips. You can't have 10 pips, 10 points profit. It's just like really, really bad logic. So you need to, if you're just taking profit too soon, then you need to look at your approach and your strategy, okay? Even though it's really tempting just to get out, but if you're going to risk like £500 and then you get £50, that's not good business at all. So that's that. So that's S&P covered. So that's been put in Discord. Everyone knows about that. Where are we? S&P US 30. Now, likewise, they've shorted it. Of course, they had to sell it, but it does look bearish, so can't blame them for it. And so I think we're going to be in a state of caution by the close, because the technical scores are going to do okay. We've actually made buys, right? And then DAX. We'll do DAX and gold. And of course, they shorted it. And it's been quite good for bears, though, to be fair. At least we're having two sides of the market. We were in a relentless uptrend for the longest time. It actually got really boring. And so there's the buy. So we should be above that box. Yeah, that's more or less okay, because we've got the crossover. Yeah, so we should be above that. And then lastly, gold. Now, gold, we've got a sandwich. Okay, so this is the resistance punishment box from them going long. So, you know, what happened is that they went long, but then they got paid. So this was a stop hunt, I think. About 80% sure it's a stop hunt. And that's the reason for it to pump. And it ignored the sentiment, and then it did fall. So I think it had to come and get some stops. So it makes me wonder, like, the validity of this being along above this box. And you can see we had a reaction, and then 3 reactions there. And it looks like now they're going to go long. So it might hold. That box may hold. And we can see we're sandwiched there. So this is the naughty thing. And this is how you can detect if it's been a stop hunt or not. Because what should happen is if they go long, they shouldn't be getting paid. There has to be a reason for it. And it could be in that it just wanted to erase some people to kick them out of the casino. And that's today's video. So hopefully that was useful. Any likes and subscribes would be cool. And don't forget, we've got the Patreon video from earlier. So if you're wondering about the different tiers and stuff like that, it's a good video to watch. And just look at the history. I made a video about 5 hours ago. So watch that if you're interested in joining us. And I wish you a good evening. I'll speak to you soon. One and all, we have a strong disclaimer that we need to stipulate. The fact is that it's really, really easy to lose money while trading, and you absolutely must have risk management at the forefront of your mind at every trade decision. Before you enter, you need to know where your exit is. You don't just enter willy-nilly. You need to stipulate your stop loss, and you need to know about your sizing as well. All this information is in the Discord as well, and it's also on YouTube. So if you don't know your sizes and then you don't know your stop loss, you're going to encounter horrific losses. Okay, and also it's highly risky. And the stuff that I put out on a daily basis, it's for your own information. It's not to be traded on its own. You need to be used with a trading system and with a risk management at the forefront of that system at all times. You can't trade without the risk management, because you will blow your money. And I dare say, if you're watching this video, you would have lost a lot of money and you've blown maybe an account or even several. So it's absolutely critical that you've got a very keen sense of risk management at everything you do. It's like crossing a busy street. You wouldn't cross the road without looking left and right. You'd wait for the traffic light, and then it would go from red, amber, green, and then once it went to green, you'd still be careful. Okay, so just a quick video there, and be really careful. It's a highly volatile market. In fact, it's probably the most volatile market you could ever get into, and while it can make you a lot of money, it can also cause catastrophic losses. So be careful at all times.